welcome to today's meeting of the European Economic and Social Committee. We have with us today a representative of the Central Bank of Spain, Ms. Liang, and from France, Ms. Marchesi. Also with us is a representative from the OECD, Ms. Manassian, and from the ECB, Mr. Saraf.
Good evening.
Good evening.
Let us begin. Please refer to your agendas as we go throughout today's meeting, and Ms. Manassian, would you please introduce the first agenda item?
Gladly, Ms. Pelizzi. The first topic of our discussion today will focus on comparing the health of the Euro area and U.S. economies. A major concern in both the Eurozone and the U.S. is the threat of accelerating inflation.
Thank you, Ms. Manassian. Ms. Liang, would you please introduce the second item?
Of course. Spain is currently facing high unemployment. In particular, their youth rates are the highest in the European Union. We hope in this meeting to address this problem and to propose possible solutions using the UK, France, and the OECD as models for reform initiatives. This will help Spain meet Europe's 2020 goals.
Let's start off with the first agenda item. Mr. Saraf, would you please begin?
In 2010, Eurozone GDP rose at an annual rate of 2.2%. The ECB forecast for 2011 is 1.5% and 1.8% for 2012, page 3.
The ECB needs to watch GDP growth, as a stronger euro could definitely impact these figures. What is the status of unemployment in the Eurozone?
The unemployment rate in the Eurozone fell to 9.8% in March from February's 9.9%. The jobless rate will remain elevated due to introduction of fiscal consolidation in public sector jobs.
The breakdown of unemployment in the Eurozone is split between core countries of Germany and France and the peripheral countries of Southern Europe, in which rates have remained flat.
Furthermore, fiscal austerity measures will weigh on demand and eventually on exports because the majority of Europe's trade is interregional. Weaker growth across the Eurozone will continue to discourage companies to hire new staff.
How has weaker growth and high unemployment affected inflationary pressures?
Headline measures rose to 2.7% year over year in March. Core inflation has also risen to an annual rate of 1.5%, see page 5. These elevating inflationary pressures due to rising energy and food prices are currently worrying our central bank.
Inflation expectations have remained unchanged, and the weak economic outlook for 2011, coupled with fiscal tightening, should dampen price pressures.
But looking at this month's numbers, it's obvious that inflation can be a major threat in the near future. Many economists expect inflation to reach 3% by this summer. And on April 7th, the ECB raised key short-term interest rates by 25 basis points.
But it's not as simple as looking at last month's inflation indexes, but looking at the role that inflation expectations play. The single mandate of the central bank is to lower and stabilize inflation.
Exactly. I really don't think that this should be seen as a reaction to a dire situation. The ECB said in their last report that the underlying momentum of economic activity continues to be positive, with uncertainty remaining elevated. This increase would simply be a precautionary measure in keeping inflation expectations firmly anchored.
Well, is the rise in headline inflation expected to be a temporary aberration?
Slightly elevated inflation rates are not yet a threat. If you cancel out food and energy prices, core inflation is well under the explicit target of 2%.
However, price pressures are rising, and consumption taxes may lead to higher wage demands. This could definitely cause some cost-push inflation.
An increase in wages in line with recent inflation could be a risk. They could depress profits and curtail hiring, and rising interest rates are already a threat to many homeowners and businesses. Increased borrowing and production costs will make Spain's goods even less price competitive in the global market.
Ms. Manassian, how does the Eurozone health compare to the U.S.?
In the U.S., real GDP rose to 3.1% year over year in the fourth quarter of 2010. Inflation remains low with the annualized core PCE at 0.9%, which has been below the U.S. implicit target of 2%. March's unemployment rate was at 8.8%, down from the 8.9% in February.
What are the forecasts for growth, unemployment, and inflation in the U.S.?
2011's forecast for real GDP is between 2.5 and 4%. This is based on manufacturing production and consumer and business spending that has recently strengthened. For 2012, there's an expectation of growth between 2.6 and 4.7%.
Now, this should be sufficient to reduce the rate of unemployment, which is supposed to be about 8.2% by the end of 2011. Still, jobless rates will remain elevated into 2012 because unemployment is a lagging indicator.
Yes, and decreased wage pressures and increased productivity measures can also account for this. Downward price pressures look to remain intact due to the overwhelming slack in the economy, as core PCE will range between 0.7 and 2% in 2011 and 0.6 and 2% in 2012, despite the rising prices of imports such as oil.
How is the recovery shaping up in both regions?
In my opinion, a U-shaped recovery could be unfolding in the U.S. Some economists predict a more robust recovery in employment. As consumer demands increase, employers who have laid off previous portions of their workforce will be forced to rehire. This isn't like the past two recessions, which experienced long-term jobless recoveries.
On the other hand, we expect a two-tier recovery in the Eurozone, with Germany and France leading growth. However, the recovery will hit a soft patch in the middle of this year when fiscal austerity begins to take hold.
Yes, fiscal consolidation will dampen growth and could also affect unemployment.
This connects to our next issue, unemployment. Spain's rate of unemployment is currently at 20.5%, which is the highest among member states. Recently, the Europe 2020 has proposed some amendments to aid the post-recession Europe. Ms. Manassian, would you like to begin?
Well, the Europe 2020 looked at issues pertaining to Europe's workforce and set several targets to fix European-wide unemployment.
Ms. Marchese, what are some of these targets?
75% of 20 to 64-year-olds are to be employed by 2020. School dropout rate should be below 10%, see page 8, and 40% of 30 to 34-year-olds should have completed a third-level education. These targets focus on making educational improvements in order to reignite employability and reduce poverty.
What are the goals the Euro 2020 has made for member states?
Goals include benefits for those who return to work and incentives for the unemployed to go into self-employment. Member states should also alter their unemployment policies to the economic cycle and assurance that they are protected in the midst of a recession.
What is Spain's current economic situation in relation to unemployment in the Euro 2020 goals?
Currently, Spain is at the highest rate of unemployment that the country has faced in 3 decades. There are projections of the unemployment rate staying above 20% until 2013.
What are the reasons behind such high unemployment?
Well, our wage bargaining system led to high labor costs. Many of these wage bargaining agreements were indexed to inflation, which led to salary increases in the midst of the recession.
It is this lack of sensitivity to market conditions that caused labor adjustment in Spain to take the form of job cuts.
What should be done to alter this wage bargaining system?
Adapting wages to the productivity of individual companies is key in minimizing job cuts. If a company is doing poorly, then the wages of their workers should reflect that. This approach would decrease cost pressures and increase Spain's competitiveness.
Other factors behind the growing unemployment are the collapse of the domestic building boom and the wider global recession.
How does the building bust relate to growing unemployment rates?
Well, the breakdown of the construction industry led to both cyclical and structural unemployment. This is because when firms faced increasing production costs due to rising prices, they laid off workers.
This is cyclical unemployment in the short term, but has led to a rise in structural unemployment because the low-skilled workers were unable to find jobs due to a lack of training and education. This increase in structural unemployment has led to a rise in Spain's NRU.
Since the recession of 2008, 1,440,000 temporary jobs have been destroyed as a result of the poor economy. While labor market fluctuations account for employment gaps, Spain faced double the amount of layoffs in proportion to countries with similar economic structures and pre-recession unemployment rates, such as France.
Yes, in looking at the configuration of the French economy versus the Spanish economy, it is clear that there are large disparities. Nearly 30% of the Spanish economy is made up of temporary contracts in comparison to 50% in the French economy.
I see. This is interesting because in the event of an economic downturn, temporary contracts are the first to be terminated because there's a relatively low opportunity cost of firing these workers.
I agree. This could definitely be the source of the discrepancy between Spain and France's unemployment hikes during the 2008 recession.
Actually, this segues into our focus topic of today's meeting, youth unemployment. Mr. Saraf, would you please brief us on the situation in Spain?
Certainly. Youth unemployment in the Eurozone now stands at 20.4%, up from February's 14.6% in 2008. Currently, the percentage of unemployed youth in Spain remains at 43.1%, which is double the average in the Eurozone.
And like the overall economy, 85% of youth jobs lost were temporary contracts, typically in the construction industry.
Furthermore, the financial crisis of 2008 combined with the collapse of the housing boom displaced an older demographic of workers who, in return, took many low-wage part-time jobs typically held by immigrants and youth workers.
The Spanish government recently proposed initiatives to reduce immigration in an attempt to open up jobs for unemployed youth. Cutting 90% of working visas and offering financial incentives for unemployed immigrants to return to their home countries are just some of these suggestions.
However, these suggestions do not effectively address the main cause of unemployed youth in Spain, structural unemployment. Spanish youth lack the skills needed to enter the job market.
The increase in unskilled labor before the recession sprung from higher availability of low-skilled jobs through flexible contracts. This resulted in a high dropout rate among students.
The destruction of over 35% of unskilled jobs in the construction industry resulted in a large percentage of unskilled, unemployed youth.
So what are your proposals to decrease this youth unemployment?
Well, the high national unemployment rate should be a first priority. I believe that if we tackle this problem first, more jobs will be created for youth.
Well, contrary to this, I feel that it's important for Spain to focus on the youth demographic because our main problem is an unskilled workforce. By creating policies that specifically target youth workers, we'll be able to ensure that this temporary downturn doesn't become a permanent long-term unemployment issue.
I have to agree with Ms. Marchese. Spain's government must focus on overall unemployment. It is important that national governments stimulate GDP growth to reduce the amount of cyclical unemployment. Because the ECB cannot change monetary policy in only one country, it is imperative that Spain uses fiscal stimulus.
Well, certainly this is an option for other countries, but Spain is currently facing a debt crisis. We've been under pressure from investors and other Eurozone economies to cut our budget deficit. Public spending is being cut by 7.7%, and wages for public sector workers by 5% this year. Simply, Spain doesn't have the money to single-handedly stimulate the economy through fiscal spending.
In this situation, Spain should decrease corporate taxes to stimulate investment spending. This would jumpstart business growth while increasing demand for capital goods. Essentially, businesses would be the catalyst in expanding the economy.
It is also important that Spain increase competitiveness, which would lead to corporate growth. Spain has one of the highest per unit labor costs in the Eurozone, second only to Greece. It's clear that lowering wage rates would make Spain's businesses more price competitive and allow them to hire more workers.
These wage cuts would lead to the reduced prices of goods. The strength of the euro currently discourages other nations from trading with Spain due to their high prices. Cutting these prices through increased labor productivity would encourage more international spending and stimulate business growth.
Aside from reducing cyclical unemployment, are there any other suggestions?
Why, yes, Spain must also examine its levels of frictional unemployment. The OECD has identified one major problem in the Spanish labor system: job search.
Spain has generous unemployment benefits and severance for long-term contract workers. Unemployed persons can receive up to 2 years of benefits, and they're paid 60 to 70% of their previous salaries.
These ample subsidies lower opportunity costs of unemployment and do not motivate workers to find jobs. This leads to an increase in frictional unemployment. By decreasing unemployment benefits and severance pay, workers will be more active in searching for these jobs.
This is an important component to Spain's unemployment, but as Ms. Liang pointed out earlier, Spain needs to focus on youth unemployment, as this is an issue currently and will continue on in the future. These reforms would have to be focused on structural unemployment within the country.
Of course, the OECD suggests that Spain increase the participation in early childhood education. Furthermore, securing the availability of apprenticeships for all students would require an increased participation between businesses and school curriculum.
This is modeled after measures that the UK has taken to decrease structural unemployment among their youth. In 2009, they introduced the Young Persons Guarantee, which assures every youth under 25 years of age who has claimed unemployment benefits for over a year either a job offer, work-focused training, or a spot on their community task force.
Yes, better education for youth would allow them to have the skills to take higher-level positions in the workforce and increase human capital.
It is imperative that particular attention be paid to ensure that these services reach children at the highest rate of dropping out of school. According to Antonio Novoa, a historian at the University of Lisbon, southern countries like Portugal and Spain have always had some problems related to education. Many people in these countries don't see education as a top priority. Any support that is given must be sustained during schooling.
An interesting proposal. Spain's youth dropout rate is currently at 26.7%, which is what steps has the Spanish government taken to reduce youth unemployment and dropout rates?
Spain's government recently proposed plans for reforming compulsory education. Once students meet basic competencies, entry into upper secondary vocational training should increase, thus lowering dropout rates. Our recent action plan, approved by the Council of Ministers, has several of these different measures.
What does this plan entail?
The action plan is an employment program which would ease the transition to full-time jobs. This would involve hiring young people along with the long-term unemployed into part-time jobs.
However, these jobs are still temporary contracts. How does this plan make the switch from temporary to permanent?
The action plan also establishes that after a minimum of 6 months, there will be incentives to transform these temporary contracts into fixed contracts.
However, this does not seem like enough reform to help Spain meet Europe's 2020 education goals.
Well, the OECD feels that it's essential to ensure that in-work training is available to all students attending vocational education. Also, businesses should be a much larger part in the design of school curricula, which would match worker skills to jobs. By instituting all of our proposals, we are confident that Spain will be able to significantly reduce their youth unemployment rates.
In order to see an improvement in overall unemployment, Spain must tighten restrictions and temporary contracts to get rid of indeterminate employment periods. There also needs to be reforms in the wage bargaining system in order to stop indexing wages to inflation.
Furthermore, strengthening apprenticeships and other vocational training programs will reignite private sector investment.
The action plan is a positive step towards reducing structural unemployment in Spain. However, it may not be enough to sustain improvement. Permanent and extreme actions need to be taken in order to successfully reduce unemployment.
All excellent suggestions. These changes will undoubtedly aid the current youth unemployment situation in Spain. Coupled with other reforms, the overall unemployment rate should be lowered. Thank you all for your time. I hope you found this meeting informative, and the minutes will be forwarded to the European Council and Commissions in the upcoming week.
Thank you.
Thank you very much. Okay. Earlier this month, the European Central Bank raised interest rates. Why do you think it did that? And do you disagree with that move?
Well, the European Central Bank raised interest rates in order to keep in line with their single mandate of price stability. Now, it's important that they did this because it kept inflation expectations across the European Union anchored. Now, personally, looking from Spain's perspective, this was not a good move because Spain does not currently face the threat of rising inflation. In fact, some economists are predicting that Spain will be in a recessionary period over this year.
This is different from the U.S. because the U.S. has dual mandate, which means they focus on unemployment and inflation. So therefore, maybe if the European Union focused less, well, not less, but equally on employment as they do inflation, maybe the rising interest rates wouldn't affect Spain so negatively.
Let me quickly follow up to that question. You mentioned the negative impact on Spain of the ECB's decision. What is the ECB's mandate? Should it look at individual countries or should it look at the euro area as a whole?
I think that's why it's important that monetary policy is controlled by the ECB, whereas fiscal policy is under the control of individual countries. Because, for instance, it's better that Spain can control its taxing in its own country. However, it's detrimental to Spain that they can't control their monetary policy because in this current situation that they're in, they'd probably devalue their currency, but because of the single monetary policy, they can't devalue a currency in one country.
Thank you.
Now, one thing that a lot of commentators have suggested is that perhaps the Eurozone should break up. Do you think that it should, and why?
I don't believe that the Eurozone should break up because the Eurozone goes a lot further than simply monetary policy. It unites nations that have typically been socially different, but places them under a single monetary policy in order to kind of avoid the issue of extreme inflation or other possible issues that could occur in one nation and affect several other nations, and having this single monetary policy that most nations abide by and fiscal policies that are typically regulated in a sense by each nation in the whole and the ECB, it allows them to stay united economically and also socially.
You also need to look at the geopolitical stability. You need to take into account that since Europe has faced 2 world wars, the Euro area and Eurozone definitely encourage better relations between countries. With a single market, you are able to freely trade interregionally, and that's a very important component of just a more peaceful world.
Additionally, price comparison, stable exchange rates, and stable long-term interest rates are also beneficial from having the European Union and using one single currency in the euro area.
So therefore, it would be more detrimental for the euro.
Okay.
They should stay together.
Yeah.
Thank you. Let's get into the detail of your challenge and your policy prescription. So one question I have for you is, you discussed a little bit cyclical versus structural unemployment. And I'd like to know what you understand by the term structural unemployment. Why is it different from cyclical unemployment?
Structural unemployment is the mismatch of skills that workers have in comparison to the jobs that are available, and therefore workers or people looking for a job don't have the skills needed for the jobs that are around.
Whereas cyclical unemployment is based on the market cycle, and if the economy is in a downturn, then more workers will be laid off, and it's not necessarily due to their education or their training.
And also, structural unemployment is a much more long-term problem because it is a factor of the natural rate of unemployment, which determines the threat of rising prices versus unemployment.
One of the things that you suggest is to strengthen apprenticeships and other vocational training programs, in part to help the dropout rate and then also to help the unemployment rate. What are the industries that hold the most hope, I guess, for Spain in terms of fixing its structural employment? Which ones offer employment opportunities?
Well, there's a lot of employment opportunities using machinery in Spain. Right now, it's you would think that it's low-skilled labor, but it really is not, because you do need proper job skills in order to operate machinery and other technologies.
We're in the technological age where computers are huge, and if the unskilled workforce doesn't have basic computer skills, that closes the doors to many job opportunities if they don't have basic computer skills that vocational programs can offer you.
To continue that, as illustrated in our script, many of the jobs that youth Spanish workers previously had were in the construction industry that collapsed during the 2008 recession, and therefore during those jobs, which were typically temporary contracts, not many skills educationally were needed, but as these jobs disappeared, there is a higher need for skills in other sectors of.
I think you said that Spain faces a risk going forward of a more severe recession, a double-dip recession. How do you propose of fixing that? Is it the labor market alone?
No. As we also mentioned, it would be important to jumpstart business spending, investment spending on capital goods, because businesses have the potential to both increase worker productivity so that you can decrease prices and export to other countries, and also they, in the long run, would be able to employ more people.
And when you employ more people, that decreases the fear of inflation within the nation. Yeah.
And with the lowering of structural and frictional unemployment, the NRU will come down, and as demonstrated by the Phillips curve, with the decrease in NRU, there will be an ability to hire more workers while lowering inflation.
So I have another question about your presentation, where you said at one stage, the strength of the euro discourages other nations from trading with Spain. And I'd like to know why the strength of the euro doesn't discourage nations from trading with, say, Germany or the Netherlands or Finland.
Well, due to the fact that Germany and France are growing, which is part of the reason that interest rates were raised, the strength of the euro, this therefore increases the strength of the euro due to the fact that those two economies are extremely huge, I think the two largest. And however, Spain also is the fourth largest economy in the Eurozone, and due to the fact that the strength of the euro is increasing, this decreases the chance of other nations trading with Spain due to the fact that they have such a high unemployment rate that their productivity is diminished, and therefore the prices of their goods increase.
Yeah, what Anna was basically getting at is that Spain is not price competitive, whereas larger economies like Germany and France are. Spain needs to work on its productivity and also reforms within the country in order to be price competitive with these larger nations that will trade with internationally.
One of the things you mentioned is Spain's wage bargaining system, in which wages go up to meet inflation. But several other countries have that as well, Germany and France, for instance. So why does it impact Spain more, or is it just that you chose to look at Spain?
Well, due to the fact that Spain has such a high unemployment rate, structurally, frictionally, and cyclically, we decided that one of the options was to stop indexing the wages to inflation in order to decrease unemployment. Due to the fact that Spain has such a high unemployment rate, we decided to choose this country, and therefore it allowed us to focus on different proposals, and that was one of the proposals long-term that could be taken in order to increase the productivity of individual companies and allow private sector investment.
To put that in context, how much do you think that would impact Spain?
I'm sorry, can you please repeat the question, please?
To adjust the wage bargaining system, how much of an impact would that have on Spain's problem?
It would be a more long-term reform. It wouldn't have an immediate impact because even in the US, we have this wage bargaining system, but we found that in Spain, it was especially detrimental because these wage bargaining contracts were not flexible. So therefore, they couldn't be changed, and more workers were being laid off. We kind of identified that as a reason why Spain had much a much greater increase in unemployment than other countries like France.
We also found that because of these wage bargaining systems, we also found that...
Actually, let's cut it off there. Thank you very much indeed for your presentation. And we will see all of you at the Moody Foundation afterwards. Thank you.